Hey, today we are going to discuss about alternate minimum tax. So, in general, from all the gross income minus adjustments, you will be getting adjusted gross income. From that, you will take standard deduction or itemized deduction, whichever is higher. We will arrive at taxable income. We will apply the tax rates. We will get tax. So, in case of AMT, first of all, why AMT means like individuals who take excess deductions and excess credits, their taxable income gets reduced, so that IRS says, hey buddy, you are paying less tax. I will correct it by taking your taxable income. I'll make some adjustments. I will arrive at AMT income. From that, I will give some exemption. Okay, these limits keep on changing from year to year, like due to inflation, like that. So from ANT income, we will make some we will deduct some adjustment exemption, and we will arrive at taxable AMT income. On that, I will apply two rates. So up to some limit, I will apply 26%. Beyond that, I will apply 28%. We will arrive at AMT. So you have the option regular taxes or not the option. I mean regular taxes or AMT, whichever is higher, you have to pay that. From that, all the withholdings, credits, estimated tax payments, quarterly, I mean payment, that has to be reduced, and we will arrive at tax due. Again, I would like to tell you one thing. This from the 2018 to 2025, we have tax cut job act. Earlier, before like 17, more than like 60 to 70 lakh people used to pay alternate minimum taxes. But during the period, during the tax cut job act period, only 200k people, 2 lakh people are paying alternate minimum taxes. That is due to like lower tax rates and enhanced exemption limits. But from 2026, we will be having one big beautiful bill act. So it says that again, that mostly the limits will be enhanced, and some kind of restrictions and all things will be happening, and this will be like again 50 to 60 lakh will be 60 lakh people will be paying alternate minimum taxes. So I'll once again. So we have like gross income, we will make adjustments or adjusted gross income. We'll from all that we will arrive at regular tax, alternate minimum tax, or this whichever is higher, we will pay that. So when it comes to exemption, for single and HOH, we have 85,700 is that exemption limit. Up to that, you can take exemption. If your AMT income is like 100k, from that you can take 85,700 exemption. Balance, on the balance you will be paying AMT taxes. That's how it is works. And we have this further, this eligible exemption is further phased out or reduction. It get reduced like by the excess limit that crosses over the certain limit. On that, 25% is reduced. So we'll do one example, you will get a better understanding. So we have a single filer. We will take his taxable income, we will make some adjustments, we will arrive at AMT income. From that, generally for a single filer, exemption is 85,700. Okay, but if the AMT income crosses certain limit, then the exemption gets reduced. What is the limit means? For single filers, you can see once again, for single filers you can see it is 6,09,350. So if it crosses that, the percentage it crossed on that, 25% is reduced, the exemption limit is reduced. So here we have AMT income once again. So here we have AMT income 7,09,350. The limit is like 6,09,350. It crossed like 1 lakh. On that, 25% is 25,000. So the limit gets reduced by 25,000. Actually, you are supposed to get exemption of 85,700, but your limit gets reduced by 25,000. So the actual allowed exemption is like 60,700. So that's it. So we'll continue this example. So AMT income is like 7,09,350, but exemption is it was supposed to be 85,700, but it crossed it by 1 lakh. 6,09,350 is for generally, you can see on the top, 6,09,350 is for, that is the maximum limit. Beyond that, it crossed like 1 lakh. 25% is disallowed, so the exemption is 60,700. We will arrive at taxable income, that is 6,48,650. From the on that, for the first 2 lakh 32,000, we will it will be charged at 26%. So we have two rates here. If the taxpayer is any other category apart from MFJ, the limit is like 2 lakh 32,000. So the taxable income up to 2 lakh 32,000, then 26% tax rate applies. If it is like beyond, then 28% on the excess amount only. Now on the excess amount only, 28% is charged. So let me just take the same example here. On the 2,32,600, 26% is tax rate. On the balance 4,16,050, 28% tax rate. So together combined, it is like 1,76,969. Whereas in the same example, we have regular tax that is like 1,50,000. We calculated AMT taxes that is like 1,76,969. Whichever is higher, 176,969 is what you are paying. From that, you will be taking withholdings and credits and estimated tax payments. We will arrive at the final tax due. So we have this concept of AMT credit also. Suppose if your regular taxes is like 10k and you are paying AMT taxes like 15k, whichever is higher, 15k you will be paying. The excess amount that you are paying 5k is allowed as AMT credit, which can be used in the next year if you are regular. I mean, if your regular taxes is greater than AMT in the next year also, you can avail that credit, and this credit can be carry forwarded indefinitely, like until you use that. This is how that works. Let me just take example for AMT credit as well. So for the adjustments, like more and more these people used to take more and more deductions and credits, all these benefits. They will be going for accelerated depreciation benefits and higher itemization. They will be itemizing these deductions in a high value, so that will make some adjustments. That is with respect to the, if he is taking standard deduction, we will add back the standard deduction. If we itemize the state and local taxes, then we will add back that. And refund on salt, which is included in the gross income, if it is included, we will deduct it. And we will make adjustments with respect to this interest on passive activity bonds and differences with respect to this tax purposes. And with respect to the tax purpose and AMT purpose, there is some difference with respect to all these things. The right side I wrote it. So all these things, if there is some differences, we will include that. We will make some adjustments. So we'll calculate that AMT tax. So let me just take this AMT credit. So AMT credit, we can carry forward it indefinitely. So in 2024, if regular tax is 20k, AMT tax is 25, whichever is higher, 25k you will be paying. The excess that you are paying 5k is the AMT credit that you can be used in the next year. In 2025, suppose, let us take two scenarios. Okay, in first scenario, regular tax is like 22,000, AMT is like 21. So whichever is higher, 22 you will be paying. So we have this prior year carry forward AMT credit, that is like 5k. Can you use 5k? No, you can't use 5k. That is restricted to the current year tax difference. I mean, regular tax and AMT tax difference. Up to that only you can use AMT credit in current year. So current year taxes is like 22k. Okay, from that AMT credit, out of 5k we are using only 1k. Okay, the balance 21,000 is the what you are paying. So the balance 4k is carry forward to next year again indefinitely. So in scenario 2, we'll see again. So the regular tax is like 22,000, AMT is like 25,000, whichever is higher, 25 will be paying. Here if you see, the regular tax is 22, again the AMT taxes we are paying. We have the prior year carry forward of 5k. Again we have this AMT credit current year 3k. We have 3k now and 5k from the last year. Both will be carry forward to next year, until you use, you can carry forward it every year. So when you carry forward it to next year, the credit you have to use it. I mean, like first in first out basis, you should use that AMT credit. This is how it works. So till now we have discussed everything, like AMT taxes, regular taxes or AMT, whichever is higher you will be paying. So the main twist in exams is that when it comes to exemption limit, you will be straight away applying that, but you have to check like taxable AMT income in that case, and tax rate also. Thank you.